All right, welcome back to the channel. Can You Do Any Better Investing? Part of the Can You Do Any Better Investing Network. This is an educational channel. We talk about all things investing. If you enjoy our videos, please smash the like button and subscribe to the channel, and you can ring the bell to get notifications so that you don't miss any of our videos. I am Tom. I am not a financial advisor, and this is not financial advice. Today, I would like to talk to you about a company called Immersion, stock ticker IMMR. These guys are a software technology company, and in my opinion, they have big things ahead. I want to dive in, and I'm going to start with the chart and show you why these guys, I think, are a little bit different. Okay, so a quick look at the chart will show that back in October and November of 2020, these guys were trading at around $6. From October 30th, they went from $6 to February 9th, they got up to $16.64 was their all-time high. So as a lot of you guys know, a lot of these growth stocks and momentum stocks, that was the period, November, December, January, February, where everything went bananas. Everything went through the roof. Companies were doubling. The stock prices were doubling, tripling, sometimes even more than that. And then inevitably came a big crash inside of the momentum growth stocks. So you'll see that happen here as well. This chart looks like a lot of charts that you may be looking at, but I would like to tell you guys why this company is different than those other companies. And I see this company coming back and their stock having a big run. Okay, so like we talked about, they work with haptic technology, which is basically touch technology for a variety of things. This is their webpage. So it says our markets. Their markets consist of mobile phones, wearables, gaming, automobiles, videos, and social are just a few areas haptic feedback has touched. So that is a lot of stuff, and a lot of that is the future of what's going on. So they have a very broad area that they deal with and a lot of potential customers. So haptic technology creates opportunities to bring new use cases and advanced applications into the car. So large screen touch displays, curved displays, dashboard button textures. So probably a lot of you are starting to see this in your cars or have for some time. And they're one of the major players behind all of this. So we'll go through some of their customers and relationships. They are a big part of the automobile world. So the other part of what they do, let's take a look. And again, this is still their website. Beyond the PlayStation. Haptics in the Sony PlayStation 5 means more than a new console with games enabled with the sense of touch. So they have a relationship with Sony, and they are the haptic technology in all of the PlayStation controllers. Then next it says Striker VR advanced haptic peripherals. Striker VR's newest control will bring novel peripheral designs to the rapidly growing consumer virtual reality market. So again, huge growth market just at its beginning. So these guys are in a lot of technology that's just starting. When we talk about them as a growth company, it's for real. Okay, Forcia and Immersion partner for haptic automotive technologies. Now, I will be honest, I was not familiar with Forcia Corporation. They are massive. This is Forcia. Their automobile supplies and parts and technology. 266 industrial sites, 39 R&D centers, and 114,000 employees in 35 different countries. This is like one of the major automobile parts suppliers in the world, and they have created a strategic partnership, let's go back to it, with Immersion for their haptic technology to integrate it into all of their cars that they supply for. So this is a major relationship. They don't just have partners, they have big partners. Immersion signs LG Electronics to a multi-year renewal license for TouchSense software. Immersion renews Panasonic to multi-year license for touch software. Immersion renews Asus Tech to a multi-year license for TouchSense software. So that's just a few of the many partnerships they have. Immersion, a world full of touch. 3+ billion devices using our technology. So they have over 3 billion devices out there right now using their haptic technology, 15 award-winning designs and products, 150 plus licensed customers. And we just talked about a few of their customers. These aren't miscellaneous companies. You know, this is Sony PlayStation, this is Panasonic, this is LG. So these are big companies. And in addition to that, they have over 3,500 patents. So, you know, they have a potential pipeline of new products that's endless. Innovation is a big part of the picture here for them. So now let's talk financials. Okay, Immersion Corporation, as I'm making this video here on July 8th, is trading at midday. It's trading at $8.36 per share. That gives it a market cap of $257.27 million. So $257 million market cap. That is a micro cap company. There are companies that do a similar amount of business or less business that are 10 times this value. So I'm going to go through why I think this is wildly undervalued at $257 million. And remember, a lot of people think about the share price, and it's $8.35 per share. But what you really have to look at when you look at a company is you have to look at the market cap. What does that translate to? That translates to a $257 million market cap, which is a very small company when you're considering this is a high-growth, cutting-edge technology company. Okay, so let's talk financials. Immersion announces preliminary results for the fiscal second quarter of 2021. So that is the quarter ended June 30th, 2021. Now, this is their preliminary results. They'll reiterate these later in August, more precisely, but for all intents and purposes, this is what they said they did. Okay, company expects 90% year-over-year revenue growth. GAAP earnings per share of between 16 and 18 cents per share, and non-GAAP earnings per share of 22 cents and 23 cents per share. In the quarter, they're profitable, first of all. So this is a new company, they're a growth company, and they're already profitable. So, and we're going to take a look at this. They were profitable last year. They're going to be profitable this year. They're projecting to be even more profitable next year. So that's something that puts them way ahead of most of their peers in this category. They're already making money. By the way, they have over $100 million in the bank, and they're profitable. So there's no future dilution coming, one would think. And again, I don't have a crystal ball, so I don't know. They may have some reason to raise money that I'm not aware of. But at the moment, their cash runway is, you know, years and years. And in addition to that, they're making cash from operations. So super healthy balance sheet, very low debt, lots of cash. They make money. This company is crushing it. So they're firing on all cylinders. Everything seems to be going their way. And what has happened, so I'm going to go back to the chart now and talk about what's happened to them. So they have gotten lumped in. Remember, we talked about this chart at the beginning. They had a meteoric rise from October to February, from $6 to $16. Ever since, they've been falling back down to earth. They got as low as $6. They're trading at $8 right now. You can see these two blue lines right here are at $8.15 and $9.29. They've been stuck in that range for the most part for quite some time now. So what has happened to this stock is it has traded alongside of all the other stocks that have very high growth rates, but have no profitability. And those companies have, 20 to 1 or 50 to 1 sales to price ratio. This company has an 8 to 1 earnings to price ratio, potentially, if they can earn $1 this year. Even if they just stay on track, it's still only 10 or 11 or 12 to 1 PE, which is crazy. So that's less than the sales to price ratio of their peers inside of this sector. So for those reasons, I look at this stock at $8 as a gigantic bargain. it will differentiate itself. If they continue to do what they're doing, if they continue to make profits, and again, this isn't financial advice, and I don't have a crystal ball, but if they keep doing what they're doing, what makes sense to me is that this stock will turn back around. This stock jumped up to $16, not on momentum and hype. This stock jumped up to $16 because of its value. So I think there's a value proposition here. If they were trading at a 30-to-1 ratio, they could potentially be a $20 or $30 stock very easily. So the other component of this is time. We don't know how long it's going to take to get to its true value, but I suspect as they continue to have quarterly earnings report sometime in the next 6 months to a year, this stock is going to take off. That's my expectation. So this is a buy and hold for me. I will add to this position on any dips. Those are my thoughts on this company. This is where I see it going. Thank you so much for watching. Please remember to, if you haven't already, smash the like button, subscribe to the channel, and we will see you in the next video.